Breaking news! Goldman Sachs reveals NIO stock predictions. NIO, the Chinese automaker, has been a longtime favorite of this channel and has had a bumpy ride on the stock exchange this year. So far this year, the stocks are down approximately 40%. But there is someone that has great belief in NIO. Goldman Sachs just purchased more than 5 million stocks, increasing their position in NIO by over 20%. They now own 1.92% of all the stocks in the company. Last time they bought stocks, they bought even more. Then they bought 12 million stocks. After the last buy, they own almost 30 million stocks in NIO. Let's take a closer look at Goldman Sachs to see if we can find reasons why they invested in NIO. Goldman Sachs is one of the most popular names on Wall Street. Goldman Sachs celebrated its 150th anniversary in 2020. Founded in 1869, the firm is headquartered in New York and maintains offices in all major financial centers around the world. Goldman Sachs is one of the highest-ranked investment banks in terms of both deal value and deal volume in the world. They made an amazing revenue of $59.34 billion in 2021. Their net earnings were $21.64 billion in 2021. Goldman Sachs owns stocks in the largest companies in the world. Companies like Apple, Alphabet, Microsoft, Alibaba, Amazon, and of course in Tesla. This giant has mentioned great belief in NIO. They have bought some expansive NIO stocks if we look at the charts from last year's. They bought stocks several times in 2021 for an average price of $40 US. One doesn't have to be a rocket scientist to understand that it is not profitable for the giant so far. What does Goldman Sachs have to say about their timing for buying even more stock now? Goldman Sachs released a new note saying the delisting fear of U.S.-listed Chinese stocks have fallen from 95% in mid-March to 50% now. The background is that U.S. regulators have for long been demanding access to audit papers of Chinese companies listed in the United States. But Beijing has been reluctant to let overseas regulators inspect accounting firms due to security concerns. 163 companies, including Alibaba, and of course NIO, had been identified by the U.S. regulator as companies not fulfilling their requirements for being listed at the U.S. Stock Exchange because of this dispute. Last week, good news arrived. China and the U.S. finally signed a deal that could avert mass stock delisting of Chinese companies at the U.S. Stock Exchange. The next day, Goldman Sachs stated that their fear for delisting had decreased to 50%, but they are still worried. Furthermore, they stated, although the audit inspection agreement may reduce the risks of broad-based delisting, it doesn't alter our view that the uncertainty around U.S.-China tensions across key strategic domains, trade, technology, capital markets, and geopolitics would continue to motivate Chinese ADRs to diversify their listing risk away from the U.S. If they're worried and still buy stocks, that's a good sign for other investors. Goldman Sachs is not the only investment bank that has bought stocks in NIO lately. The world's largest investment bank, JP Morgan, has also bought stocks in NIO. Chris Budin of Goldman Sachs says this about the company's buy of NIO stocks. The global market for electric vehicles is poised for further growth as the prices of batteries, historically the largest cost of the vehicle, continues to decline and major auto manufacturers commit significant resources to electrifying their fleets. At the rate that battery prices are coming down, we're going to be at a point in the next 5 years where it's not a choice between paying more to drive an electric vehicle versus an internal combustion engine. It's going to be a comparable choice. It's not just the early adopters or early startups who are focusing on electric vehicles. It's major automotive manufacturers really committing significant resources to electrifying their fleets over the next 5 to 10 years. Goldman Sachs' visions for the EV market in 2025 are The car will grow smarter and more efficient, with high-efficiency engines, lighter materials, and autonomous driving systems. The industry will evolve with new competition from tech companies and suppliers capable of producing high-tech parts at low prices. Car drivers will look at cars differently, sharing cars and using them as a space to consume media and make calls. A growing percentage of those drivers will come from emerging markets. There is no doubt Goldman Sachs has great belief in NIO. They should have, since they have been buying the share at an average of almost $40. There is a lot of positive signs from NIO lately. I have touched on these topics in 2 of my latest videos, one about NIO coming to the US and one about NIO launching in Germany. You will find the links to them in the description of this video. When it comes to stocks and companies, me and maybe you are amateurs. We read and watch news about companies that perhaps will become great success. I personally have strong belief in the EV market. I think that within 2030, more than 50% of every car driver will drive an electric car. Why? Because of new technology. Electric cars will cost the same as petrol cars, and they will be cheaper to use. Charging with electricity instead of fossil fuel will be cheaper for the car owner. And of course, there are the government incentives in almost every country in the world. Even in the US, we get tax credit when we buy an electric car. I hope that my NIO and Tesla investments will give me great returns one day. What about you? Do you have faith in the EV market and in electric cars? Well, that was all for now. I hope you will subscribe to my channel. And if you haven't done it yet, do check out my other videos about NIO.